All right. Good to see everybody. So let's get right into this. Get my screen shared. All right. So the topic today is, with the election upcoming, what the impact can be in the markets, and focusing on what I think are common types of companies that are on people's minds when there's an election. So things that are seen as heavily influenced by the political cycle or swings in political power. Um, Now, my overall view of this is that the actual results of an election, and specifically trying to time a trade based on an election outcome, isn't as important as a lot of people think that it is. So, I'm going to give just sort of a rundown of why that is. All right, so share my screen, and all right, and if there's any specific stocks any of you have in mind who are watching, please let me know, and I can even show here. But first one I wanted to go over was Smith and Wesson. So this is something that shows the price history of the stock. As we can see, it's gone up and down a lot over the years, and we can see that there's some cyclicality to it for sure. What exactly affects that? Well, here we can see this is clearly just the stock market crash of 2008. So that may not be as impactful. And so if we look here, we see it starts to rise, it goes down, starts to rise, it goes down. And the movement of the stock price here is largely following, fluctuations in its revenues. So we see here, it starts out at about $500 million, gets close to $1 billion in 2017, falls back down to about half, gets close to $1 billion about 2021. Now, so it oscillates between the two. Lately, it's been more in the $500 million annual revenue range. So we know that this can have a lot more sales. But let's go ahead and look at historically what has affected this. So we're going to look at the price here. All right, we're going to look at, and we're going to try and focus on like what exactly happened with the price movement during the results of an election. So I'll go ahead and I'll just focus on 2016 real quick. We'll look at basically to the end of the year what happens. So basically, sort of the second half of the year. We can see here, this is October, and as we get to the buildup of the election, we do see it can go up quite a bit, and then November 8th was election day. Trump has declared the winner, and we do see it dropped sharply. So this is probably reflecting, an assumption on behalf of the market that there'd be less gun sales under a Republican President Trump. It did snap back a bit. All right, so within the course of a week, it was only down from about 28 to 24. That continued then to go down to the 20s. If we look at what it did in the last 10 years overall, let's go back to 2016 here. Continued to go down, and then we see it actually shot up here, and we can see that it's shooting up in 2020. Now, you might think this is related to the election year, but actually, let's go ahead and zero in on that. This is actually a very interesting data point. So go to 2020, and we'll just start with, we'll go with like from February 1st to, we'll just go to like the end of the year. Okay, so here's where it shoots up. It's kind of flat here, but around the 28th, 29th, it really just starts to take off. So what happened on May 28th? Let's see. Let me see if I can find something here. Right. So yeah, here we go. Right here. This is what happened May 28th. So yes, it was an election year, but this is also the day that George Floyd was killed. And as we can see, due to the backlash that resulted, with the protests and the riots, a lot more people became concerned about personal safety, and investors anticipated that in the markets, and that led to a rise in the price of Smith & Wesson stock, even before Smith & Wesson necessarily reported higher sales. Right? People just naturally concluded, oh, well, there's going to be more sales, and we see that from May 28th to this peak here, which is August 10th. Now it went from just over $10 a share, maybe under 11, to just under 27. So more than double at the very least. And then it comes back down, probably as quarterly results come in and confirm how much additional sales were resulting from the current events. And then when we actually get to the election outcome, what's interesting here is where we see that the price dropped in response to a Republican winning. When we get confirmation that Biden wins, we don't see the price really shoot up much immediately. It wasn't anything as drastic as what was seen in 2016. And so there's a lot going on here. And you could maybe say some of it's a response to COVID. Maybe people thought that COVID was affecting the business. We do see that it shot up more into 2021. So as we get to May, it shot up of 2021. I'm not exactly sure, or what in May or June, what exactly the catalyst was there. But the point being, there are a lot of things that can snap it very quickly, and making an investment purely on an election outcome. And this is the kind of stock that's stereotyped to be, an election stock. There's a lot of other things that can go on. Let's talk about something else. Let's talk about oil company. I'll just bring up Exxon as an example. Again, we can see cycles goes up really high, really low. Obviously, same thing here. This is the crash of the Great Recession, so we know what causes it there. So we're in a recession. People are, buying less oil. And oh wait, did it? It did not update the chart to Smith & Wesson. Okay, there we go. Okay. Lesson learned. Make sure to refresh the page. Okay. Closing that. Oh, let me check the comments real quick. It does not seem we have any visitors yet. If you have questions about any of this, please drop them. And anyway, I'm going to proceed with looking at Exxon. If there's any stocks you'd like to see what the impact from the election was, also please ask. So let's look at Exxon here. I'm going to look at. Yeah, we're gonna look at just the period around 2016. So let's take a look here. I'll just do a similar thing. Basically, get the second half of the year. So we see it's down for quite a bit, and then doesn't really respond much with the election results. I mean, it goes up a bit. This is a price return. Let me adjust this a bit. We want to get the actual price itself. Yeah, there we go. Better. All right. So now, if we look here, it does go up a bit once the election results come out, but actual response mostly occurred, a bigger response occurred in December. And then if we look at, just the last 10 years in general, we see that there's just generally bigger, and it's really just supply and demand of oil. The biggest thing here is as we get into 2022, once the threat of Russia invading Ukraine begins to pick up, and then that threat becomes an actual invasion, we see that oil prices went up, and with it, the price of oil stocks. And since that war is still ongoing, and it's limited the export of fossil fuels and strained the energy supply overall, stocks like Exxon are still up. I mean, if we can look at Chevron, and once again, they're making me I have to change it from the return to the price itself. Let's look here. We see here, same period of time, shoots up in response to the invasion. And this crash here is obviously COVID. Big reason why oil stocks were lower in 2020 was just the lockdowns meant people weren't driving as much, so fuel prices went down. There's less demand for oil. So election bets are one thing, but there's usually something bigger going on in the world. Here's an interesting one. That this is a company that heavily depends on government assistance. This is Plug Power. They do that. They're the hydrogen cell electric company. So they burn hydrogen fuel and use it to generate electricity. But it's not profitable, and it's if we look here at how long this has actually been a public company, this is about as old as Nvidia. So you go back to the late 90s. You can see around the IPO, people were excited about it. This is also the dot-com bubble. A lot of new stocks that had some sort of tech angle were big at this time. I mean, look at it. It was into the thousands. And it's a penny stock now. And we see it's just gone down, incrementally throughout its lifetime. And I mean, the reason is not too surprising. If we look at its cash flows, this thing does not generate positive cash flows. In fact, the more it scales, I notice here that the cash outflow from their operations, parentheses means it's negative, it gets bigger. If we look at the income statement, as the business scales, it just burns more cash. It's the bad business. But it's sort of a eco-friendly stock because when you burn hydrogen, what is your output? You get steam. There's no carbon footprint. You just get water from it. So let me go back to the chart here. Is there something where somebody might have had some sort of impact from the election? So let's go back to price. Check comments real quick. WSF. Let's see. Does the U.S. economy grow faster under the Rev or Dem politics? If you were first to vote, would you vote for? So, I mean, the economy seems to grow at a pretty average rate. It's around 2%. And I think there's a lot more going on than who's a Democrat or a Republican president at the time. Plus, you have to figure what's the congressional makeup and how well is that Congress working with that president. So I think it's a pretty complicated issue. So there's whoever's the president, then there's what's happening with the global oil supply, something like OPEC happening with stagflation in the 70s. Something like a war in the Middle East, like Iraq happening, which we saw in the aughts. Is the Cold War ending, right? Is the Soviet Union going down? How much of the boom in the 90s under Clinton was attributable to the fact that we just weren't going to be wasting money on Cold War arms races anymore, and the fact that things were just going neatly for us, right? If Al Gore were president when 9/11 happened and we started getting involved in Middle Eastern wars, would the price of oil have been lower just because he's a Democrat? These are the things I think folks need to ask. And then similarly, with the Glass-Steagall Act expiring and other like New Deal legislation or policy expiring or being repealed in the 90s under Clinton, do we avoid a Great Recession in 2008 just because Gore narrowly wins in 2000? Or do those the risks that were allowed to exist compound anyway? And there's a lot of what ifs here. I suspect that it wouldn't have been hugely different either way, just because businesses still have a lot of room to operate and adapt. I think regulations only change things on the margins, generally speaking. I don't think we've had huge major policy by a party that would shift it one way or another. as far as the whole economy is concerned, right? If we're talking that much. So yeah, if I were forced to vote, who would I vote for? Well, you can't force me to vote. So, I mean, you can threaten me, but then that assumes I would vote under a threat, right? Maybe I wouldn't. So let's go ahead and look at this real quick, just so we don't forget. Kind of do a similar time span here. 2016. Whoa, it disappeared on me. And I can do it to the end of the year. Apply. So we see there's a bit of a rise and fall here. And perhaps here it was rising because people were expecting, the polls were showing a clear advantage. It does seem like as election day came, it crashed. And then as we get an outcome, though, it seems to rebound. So it's really, even though this is more of a green stock, you'd think it would be favorable for a Democrat. Seems like the initial snap reaction by the market, and this may not seem like a lot. It's from a $1.25 to like $1.50, but that's a 20% gain for that. So the percentage does matter, depending on 20%. Whatever the share price is still 20%. If we look at what the long-term return has been, though, we actually see that, again, we go back here, it used to be way higher. But if we look at just the last decade, most of the gains on this stock happened after the election. And you might think, is this a response to the election? Well, no, it's, in my view, this is right around the time of the buildup to the GameStop short squeeze. And the seeds for that short squeeze really happened in like November, December of 2020, and then it really took off. And so I remember seeing Plug touted as we got into January as one of those meme stocks. I remember being shared alongside GameStop and what was the other one? AMC and BlackBerry. So the meme movement happens, it goes back down, it zigzags a bit, and as this starts to wear off and people see that under Biden this doesn't become cash flow positive, it just goes down again. So if you could have anticipated a short squeeze and some sort of meme stock movement around it that had never happened before, then yeah, there's a great return there, right? You go from a few bucks per share to over 60 at the top. I mean, put in enough money, make it, you're a rich person with that kind of multiple. But there's no way to predict that. And the business itself it's just a lousy business, and it's lower now than when people bought it right before the squeeze, because it doesn't make money. And if we look at how it finances itself, go here, they're constantly issuing more stock to get money. And in fact, we see they took advantage of the stock increases in 2020 and 2021 to raise billions in free capital. This is better than debt. They don't have to raise debt. And if we look at their cash position since then, it helped them get through these times a bit, but they're already burning through that cash and they have almost none of it anymore. So they're not in a great situation at the moment, and they're going to need to raise more cash, so they'll have to take on debt or sell more shares, and they might get delisted if they can't keep their share price high enough. So they might do a reverse split. It's just not really much to write home about. Check comments again. Oh, come on, Law. Saw your X account. You don't follow many lefties. But I don't follow many people on X. Most of the people I follow are other investors and some folks who are important in just like, I think people who are important to kind of see what's going on. So like, for example, I follow Elon Musk because he bought the site out, and what he thinks is going to be important on that website. Obviously, like I follow like the major candidates, so follow Trump, follow Harris. At least I think I follow Harris. Maybe I didn't follow her after I was following Biden, but maybe I didn't follow Harris when Biden dropped out. But that's generally what I do is I follow those types of folks. And I definitely don't follow like a lot of drama people on X. I usually try to follow people who have something to say that's important. In fact, I would say probably most of the accounts I've blocked have been these right-wing Trumpers who just are always complaining about the left. I've had to block a lot of those or mute them because they just have a bunch of nonsense that clog up my feed that isn't helpful. But yeah, I mean, if you don't like my answer, it's just the fact that like I really don't have to vote. Like some people, like I think most people, yeah, if you put a gun to their head, they'll pick. But not everyone has to feel that way. Hydrogen might be useful for trucks. It might be. I mean, the main thing they use for trucks is I mean, the main thing they use with their fuel cells is forklifts, I think. Maybe that's a kind of truck. I mean, but the tricky thing is that it is difficult to transport hydrogen safely because it's so flammable. You need extremely reinforced steel tanks, like if you're going to put it in the back of a truck and ship a big tube of hydrogen, basically a long distance. You need something more akin to like a pipeline system, and you need them. You need it like at a large center that is supplying energy to like a very specific source, like a factory or something that's going to be using it. So this way, maybe forklifts can do it, but it is difficult to get to like something very ambitious with it. And the science of it just makes it very prohibitive. Yeah, and so I don't think Plug will ever be profitable because they've been around since the 90s. I mean, what more can they do to become profitable? Tesla figured out a way to become profitable, trying to do a green model. And so, given enough time, a green model becomes profitable or it doesn't. And I don't think there's anything to Plug other than just, hopes and dreams at the shareholders' expense over time. So yeah, let's look at the S&P 500 like generally. I guess this is an S&P 500 ETF, but it'll do. It's basically the same thing. All right, so we're still on. All right, for some reason we're still on Plug on the chart. Let me go here. Oh, that's funny. It's showing like the S&P 500 here as well. But I don't think that'll show us like a price movement. So valuation, price. All right, so like let's look over the last 10 years. I mean, we just see it's mostly been a general rise, and again, you're kind of like looking at the movement of the economy, except here it's on an average of 2%, that the average return is 10% because these are the the top gainers of the economy. And I got a notification. Okay, it's nothing related to this. Okay. All right, so let's take a look at what the impact was for 2016 as well. Oh, I'm hearing another version of All I Want for Christmas Is You here in the shop. I heard the Mariah Carey one, and now this is someone else doing it, sounds like. All right, so it seems here that the market anticipating a Trump win responded well. Looks like it was a bit before the announcement, but it continued to go up after he won. So seem to like that news. Let's see what happened in 2020. All right, so this is the S&P 500. It's an ETF for it, but I mean that's how you invest in the S&P 500 is you buy something like an ETF. So we go to 2020. Okay, that's easy. It just snaps right to the date that I want. So we get here, and as we get to the outcome here, this is basically Joe Biden's announcement of victory, and looks like the market also responded well to that. And that could be in the context of COVID. They might have thought Biden was a better president for COVID. And the fact that some things were starting to improve under COVID. But in general, I mean, if you look at the long history of the S&P 500, even though you have the dot-com bubble here and the Great Recession here, it's just a steady compounder at an average return of 10% in the long run. And if you're investing in the S&P 500, trying to guess on the market is probably not important. What might be better is if you just make sure you don't get it at like a really high PE ratio. So let me see if it'll pull that up for this. I don't know if it will. Oh boy, yeah, you got those weird moments. Let's look at the last 10 years. So there are times where the S&P 500's PE ratio is high because the price goes up before updated earnings are announced, and then as higher earnings are announced, the ratio gets smaller. But you see that usually the low end it's in the single digits, the high end it's about the 20s or the 30s, and so you can just make sure you're buying on the lower end, and you get a long period of time to do that. Generally, you don't have to worry about timing elections. Just don't overpay for the index. That's not perfect, but it's a much more practical way to approach things. And again, there are other factors here, right? It's not just elections; it's the general movement of the economy, and then what the companies inside the index are doing, which are like the 500 largest companies in the company, more or less. Do you think Trump tariffs will reduce economic growth? They might. In some ways, it's going to be a mixed bag, I think. There's obviously issues where the trade deals aren't supporting the American economy in the way that people thought. So there's a lot of nominal GDP growth, but whether or not Americans are actually better off as a whole from it is a different question. And economy isn't an economy isn't just to be some sort of arbitrary number that we say is up a certain amount or a certain percentage, and therefore a goal is met. The whole point of measuring economic data is to try and see if human well-being is actually improving or not. And if you get a lot of signs that it's not, then just the standard GDP measure on its own is going to help with that. And so it just depends on if by economic growth you mean purely nominal GDP or even real GDP. Right? There's a thing I call real GDP, which is because real GDP is when you adjust for inflation, but real GDP is when you actually improve the productive capacity of a country. So if you have real GDP growth, that's positive. So after taking into account inflation, but a lot of that is for businesses that just result in more consumption. So we've had a lot of growth in our entertainment sector, for example, right? We went from having, let's say like a much smaller media industry like 15 years ago compared to today. Think of like all the Marvel movies that are out now, and all the video games that are out now, and how much money goes into that, and it's a significantly larger industry than it was. There's a lot more e-commerce retail going on. In general, retail sales keep going up across the U.S. Even during COVID, they increased. And you might ask ourselves, how many more of these consumer goods that we're buying are actually necessary? Like, are we selling more crops? Are crop yields improving? Are there more homes? Are there more schools? Are there better medicines? Or are we just finding things more that we technically write as a sale, and that can go into GDP growth? I think if it were the case that we were being more productive, we wouldn't have to keep taking on so much debt to fund our public budget. It would just naturally lead to higher tax revenues that pay off the debts we took on, 20, 30 years ago. So the tariffs might help certain sectors that are politically important, like the Rust Belt states, in keeping jobs over there. And, you can make the argument that if certain regions fall out because of job losses, then their role in keeping the whole U.S. economy going fails, and the U.S. economy can fail, right? Like, so if Michigan just completely collapses, let's say, then states next to Michigan suddenly have trouble, even if they were doing fine up to that point, and then it can be a domino effect. So it's sort of like you might think of it as like just maintaining blood flow. That's an important part of economic development, and the Trump tariffs may help with that. If there's one company that might benefit from Trump tariffs, probably I think would be Cleveland-Cliffs, because they're an American steel manufacturer, and there was the bid with Nippon Steel for control of U.S. Steel. They had actually made an offer to acquire U.S. Steel, and Cleveland-Cliffs has a lot of union backing. And the Biden administration didn't go through with it because they basically said we need to keep domestic steel production domestic. If we look here at what happened over the last few years, we see that they also shoot up around the time of 2022 in response to Russian invasion of Ukraine, because the number one exporters of iron are the U.S., Ukraine, and Russia. And so when Ukraine and Russia go to war and the trade route in the Black Sea shuts down and then is disrupted for a while once it picks up again, most American steel manufacturers who need to import that iron to make into steel are disrupted, but not Cleveland-Cliffs, because they own iron mines here in the United States. So they were able to continue to operate on their own terms without getting their margins squeezed by the undersupply of iron ore. And that led to this is the price return. Let me go back to the actual price itself. I don't know why it defaults to price return on this chart every time. Yeah, so it went here from, this is it during COVID. If we look to like right before the invasion, it's at about 16. It doubles in a couple of months, and then it snaps back down, and it's actually been a bit lower lately. I think this is probably a stock that would benefit somewhat from protectionism, favoring American steel, but if we look at them right, like some of what also helps them is the fact that they are cash flow positive. They did have some outflows in 2020, but that quickly reversed. This was a company that underwent a long transformation over the last decade. It was just an iron miner here, and it was transformed around this point into a steel manufacturer. So the current leadership of the company completely changed this company around. But again, right, that's largely not dependent on who wins an election. Like, for me to even look at the 2016 election impact to the stock price wouldn't be very helpful, because it was a fundamentally different company at the time. It just mined iron, and it was in the process of divesting some of its mining assets that it had around the world and focusing more on being a vertical domestic American steel manufacturer. And these are the things people really need to focus on when they are looking at stocks. The main idea I'm trying to convey today is that people are tempted to get tunnel vision on what the outcome of the election is, but they need not be. Europe is going to put tariffs on China's electric cars. China is saying they might put tariffs on EU dairy products. Well, I suspect with electric cars here in America, Tesla is still the leader. I think anyone who wants an electric car would probably buy a Tesla. There's a lot of advantages that come with Tesla, like the features of it. It's a question of, if there's smart features in your car, whom do you trust with that, a Chinese company or Tesla? I think most people are going to trust Tesla more. Tesla also has a more ambitious vision for, what a Tesla can do for its consumers, namely that, they all the Tesla cars that are out right now have the hardware they need to be supported by eventual software improvements to the fleet and network. And the robotaxi vision is essentially saying that like people's own cars could be used to earn income for them. I don't see anything like this comparable happening with China, and I don't think a tariff war changes that fundamental value proposition, as well as just the fact that I mean people don't seem to want to buy Chinese cars, right? They might buy Japanese or Korean cars because they're friendly to us and they're made at good prices and they have plants here and they manufacture them here. But I don't see people feeling the same about Chinese vehicles. I suspect trade with China in some ways will be limited more, but that might be a good thing because we have a lot of cheap consumer goods that are made in China that we spend money on that's just not helpful to us. Like how many McDonald's Happy Meals really need to be made in China? How much more American GDP needs to be spent on that? That I'm talking about the toys mainly. Just to give an example, there's just a lot of wasteful things that come with that, and we could spend more on these things as a country, and we can record GDP growth. But that's the kind of GDP growth that leads us to say, oh, we're in a bubble. There's going to be a correction because not everything that you record as GDP growth is necessarily valuable, right? Not all recorded dollars in the increase of American GDP are equal, right? Some things that we record as a dollar in economic gain might actually be negative in the long run to our productivity and well-being as a country. And same could go with any economy, right? I mean, like could be like your country, right? Ireland, and not all of its GDP growth is necessarily going to be one-to-one as is reported. It's even possible that you could have better economic results than GDP growth even implies. I think that's less likely, but I think it's possible. So yeah, that's basically some of the stuff I wanted to go over there. One thing I will also point about Smith & Wesson about long-term one, I don't think it's actually too bad of a stock, is if you look here at the balance sheet, they use the money they made in previous years to wipe out their debt completely. They've been completely debt-free since 2020. Well, okay, they did take on a little bit more here, but when you compare it to their cash flows, right? Let's take a look here. Cash from operations. Their current amount of debt is less than a single year's cash from operations. So they're a pretty healthy company. And there's not much reason to worry about them. And they're not a bad long-term hold. So, but that's sort of how you have to see it. Is a lot of people start thinking about stocks like Smith & Wesson when an election happens, but it's a company unto itself. You don't have to initially just limit your thinking to that. Okay. Well, I'm not seeing any other questions. Well, that's an interesting guess. I'd be curious to know why. When you say it, like, what do you mean? Do you mean the S&P 500? I could see the S&P 500 going up largely because of the Magnificent Seven, the tech stocks that account for most of its gains in the last few years. I think big tech benefits more from a Democratic administration that's more likely to be friendly to it. I can see a Republican administration being particularly hostile to some tech companies. Are you talking about Smith and Wesson? Yeah, I could see it going up if Kamala wins. I mean, I think she's been one of the more explicitly in control of taking away guns than other Democrats we've seen. So people might respond to that by just buying more guns before she can take them. All right, if you have any more questions, let me know. Otherwise, I think I might wind down. We're a little over 40 minutes in, which isn't bad. And I think this is a pretty simple topic. It's simpler than I think a lot of people make it out to be. Am I autistic? I've never been diagnosed as that. So, no, I could not say that. And even if I were, I don't think it would be particularly important at this point in my life. Because I'm 33. Clearly I'm high functioning. Like I'm not one of those people that needs what's the word? I don't need like a chaperone or a supervisor. I forget the word. A guardian. There we go. I don't need a legal guardian I know of people who need that. And then, like, one thing I've also noticed is a lot of other autistic people usually do something like work with animals, like they become dog walkers or something. And I've done all right in jobs with people. I think what's different about me is just my emotional temperament. With autistic people, I think they have a mixture of emotional temperaments. And it's for them, it's more of a sensory disorientation kind of thing that leads them not to notice things. And that can lead them to have certain temperaments, or seem to have certain temperaments. But I'm the kind of guy who looks at things and I don't see the appeal of them. And I have just a very muted approach to a lot of things. Am I a psychopath? Well, I generally care about what happens to other people as a result of my actions. And it's a tricky thing to figure out what the overall net effect would be, right? You got to think the short term, long term, what's likely to happen, what's not likely to happen. What are the things that are in your control and not? What are things that you have to let happen? Right? Sometimes you have to let people fail, so that they can at least have a certain little level of dignity or control over their own lives, so that they have the opportunity to learn. Right? If you make people succeed rather than let them fail, sometimes the force by which you would make them succeed is crueler than the setbacks of the failure, right? I don't think a psychopath would be caring very much about this stuff. I think they just would do whatever they want, and Yeah, I know, but I also know that like some people I'm aware of, like the panel verse and the kind of people that float in it. I know that these are questions that might actually be seriously asked of folks, right? Like folks who hang out with Jeff and they're neurodivergent, right? Like he brings in a lot of those folks. So I appreciate that just might be a genuine question folks have. Because I know that when he talks about neurodivergence, he's not just talking about autistic people. He might even be talking about people who are sociopaths or psychopaths who are trying to work with their limitations to function, right? So I will say that when you're at peace with things, people often see it as not caring. Um, and I think it's because people can't see how you could care and be at peace sometimes. Sometimes the way in which people care leads them to have no peace whatsoever. And I think that's just a failure of imagination on their part. If anything, it's when people, and obviously you're not doing this, but when people accuse you of something like psychopathy, it's sort of a failure of empathy on their part to imagine that you could reach a certain emotional state, a different emotional state, despite having the same fundamental concerns. Because empathy is being able to put yourself in other people's shoes, right? If you can only ever put people in your own shoes and just like, why aren't they feeling the same way I feel? That's kind of the opposite of empathy. And I've noticed a lot of people who claim to be empaths do that. They're only empathetic to people who are, of the same emotional temperament. But then when you think about it, that's not really good empathy. Like I think a good empath, like if someone who could really earn the title, if it's a title you'd even want, would be able to have a pretty high success rate with people of different emotional temperaments. But yeah, anyway, we're getting off the topic of stocks now. It's kind of interesting, right? But it's not stocks. Any other stock questions, WASF, before we wrap up? Okay, I'm not seeing any. All right, well then I am gonna just stop sharing my screen and wrap this up for the day. So yeah, thanks for stopping by. And then we'll probably stream again next week as well, same time. Oh, what am I most worried about if Kamala wins? Well, I suppose the most immediately threatening thing is that the election would be contested, and then it would lead to some sort of um, constitutional crisis, and nobody knows how to resolve it. And there's an outbreak of violence. So there's just complete chaos. So that's the only thing that particularly I think concerns me. But as far as her being president, I mean, I'm not any more worried than I am for anything else. Anyway, yeah, with that, I will go ahead and end the stream, and I'll catch you all next week, probably around this time.